4. Post the following in the ledger and balance the various accounts. January 1st, started business with 55,000 cash. January 3rd, purchased goods worth 35,000 naira cash. On the 8th, cash sales 70,000 naira. On the 12th, paid rent 8,000 cash. On the 19th, sold goods 19,500 on credit to Bimbo. On the 24th, bought motor vehicle from UTC 12,500 naira cash. On the 27th, received commission by cash 4,500. So this is the question we are going to work with, and from here the instruction said we should post these into a ledger and open the individual accounts for all these transactions. Because of space, I'll have to wipe this out. The questions are already in your note, so I'll just show the workings on how we are going to do this. The first account we'll open is cash account. Like the name implies, cash account, that means it's only the transactions that we are done by cash that we are going to post here. And going through the question, we have the transaction on the 1st of January, it was by cash. Transaction on the 3rd, it was by cash. On the 8th, by cash. On the 12th, by cash. On the 24th, by cash. And on the 27th, by cash. These are the transactions that we are going to post into these cash accounts. Note, the transaction on the 24th was on credit, on the 19th was on credit, so it is not going to this account itself. As we go further, we'll see where we're going to post such transaction. So first, the transaction of on the 1st, they said it started business with 55,000, and we know that starting business, that is capital. So you have January 1, capital. The amount is 55,000 naira. It is debited because it is a benefit or it's an income to the organization. Then you have the transaction of on the 3rd. On the 3rd, the question said purchase goods. It's purchases. You spent money, so you post in the credit side. Purchases for 35,000 naira. On the 8th is cash sales, more money to the organization, so you debit it, and it is for 70,000 naira. On the 12th, you paid rent. You spent money, so it's to be credited, and that is for 8,000 naira. On the 19th, they sold to Bimbo. It's on credit, so it's not coming to this account. On the 24th, they spent money again. What did they use it for? They bought motor van. and they spent 12,500 naira. Next transaction, they received. What they received? Commission. And that is for 4,500 naira. So these are the transactions. Now we are going to balance the account. Please note that in preparing your ledgers, any transaction that is more than one entry, any ledger that is more than one entry should be balanced at the end of the day. So we are going to balance this now. How do we balance? First of all, you add the two sides together, which we will do now. You have 55,000 here, plus 70,000. This will give you 125,000 plus 4,500. This will give you 129,500. Now we'll add this side too. You have 35,000 plus 8,000. This will give you 43,000 plus 12,500. This will give you 55,500. So from the addition, you discover that the debit side is higher than the credit side. So what do you do next? You take this total from this total. So you now take this less 55,500. So here you have 0, 0. This from this is 4. This is 12. From this is 7. So this 74,400, 74,000, you bring it here as at the same dates as balance carried down. If you remember some terms that are used along with the ledger that we treated in JS1, one of them is this. CD means carried down. So what are we carrying down? This balance, 74,000 naira. So you add. Make sure that your balances are on the same line. So when you add the 74 to this, you will come back to 129,500. The same thing here. 500. You bring this balance this way again. You have balance brought down. And you bring this balance down, which is 74,000 naira. That is for the first ledger, which is the cash account. Now we are going to prepare other accounts. They said we should open the individual accounts, so we'll come to capital. Capital account. Remember the double entry principle. Every debit entry must have a corresponding credit entry. So capital is debited here. In the individual account, we are going to credit it. So here, capital, you have cash, and that is 55,000 naira. The next account we open is rent account. The rent account was credited here, so this time around is going to be debited. January 12th, cash, 8,000 naira. So that's 2. Open other accounts. For space, I have to wipe this out. Open commission account. Commission was debited, so we have to credit it now. It was for January 27th, and commission was 4,500 naira. We have sales account. Remember, the sales was done to Bimbo, and it was done on credit. So you have January 8th, cash. That's the first sales we have on the 8th, 70,000 naira. Now you bring Bimbo's own here. That's the transaction from the 19th, and that was for 19,500. So you add these two, you have 89,500. To balance the account, you bring it here. That's at the end of the month now. You have January 30th. Balance brought down. Carried down, which is 89,000. 89,500. 89,500. Then we open for purchases. Purchase was debited in the cash account, so now we'll have to credit it to balance the account. January 3rd, 35,000 naira. Then you have motor vehicle account. It was credited in the cash account, so now it's going to be debited. January 25th, cash, 12,500. So these are the individual ledgers. For emphasis, please let me explain this again. Like we said, every transaction must be recorded 2 times. Bimbo was not recorded in the cash account because it was on credit, but it has to be recorded. So it is recorded in the sales account. You have cash sales in the cash account on the debit side, now it's on the credit side, but you have to add Bimbo's money to it because it was sold. It is a sales, although cash has not been paid yet. So that's why we added Bimbo's money to cash sales under the sales account. So now the account has been balanced. So this is the end of the class. All assignments pertaining to this will be sent to you in your notes. Thank you.